Welcome to the deep dive. Today, we're setting our sights on Equinox Gold. They've been making some waves, in the gold mining sector. Their recent Q2 2025 earnings call gives us a really interesting look into a company that seems to be, changing quite a bit. This deep dive will get you right up to speed on their latest performance, what it might mean for their future. You should walk away with a clearer picture of their, let's say, financial health, operational steps, and where they're headed strategically. Think of it as your shortcut to understanding a pretty critical moment for Equinox.
Yeah, it's fascinating because Equinox Gold really seems to be entering this pivotal phase. For years they've been pouring capital into building things out, these big assets, and now these Q2 results and how the market reacted, it really highlights this shift moving away from that heavy spending towards production and maybe more importantly, cash flow. So we'll dig into how they're positioning themselves, especially with gold prices being, still very strong.
Okay, so let's unpack those Q2 financials first, because honestly, they really crushed expectations. They reported a non-GAAP adjusted EPS of $0.11. Now, that adjusted figure, it basically smooths out some of the accounting noise, gives you a clearer view of the core business, right?
Exactly. It's about ongoing operational profitability. And that $1.11 was way higher than the consensus, which was, $0.03. Huge beat.
Huge beat. And that wasn't an accident, was it? It came from strong revenue.
Absolutely. Revenue hit $478.6 million. Again, better than the $470 million expected. And that's a massive 77.7% increase compared to last year. But the real driver, like you said, was production. It soared by 49% year over year.
Wow, 49%.
Yeah, 219,122 ounces. And they got a great price for it, too. Eurized gold price of $3,207 an ounce. That production jump, it's not just more gold. It feels like an inflection point. The investments are finally paying off in serious volume.
So that operational success is hitting the bottom line. What else should we look at financially?
Well, connecting the dots, strong cash flow. They generated $159.8 million in operating cash flow. And adjusted EBITDA, that's earnings before interest, taxes, depreciation, amortization, was $205.0 million. It's a good measure of operating performance.
Okay. And what about debt and cash?
Right. So net debt stood at $1.37 billion, which sounds like a lot, but they ended the quarter with a solid $406.7 million in cash and equivalents. That suggests a strong liquidity position, gives them flexibility as they push for more cash flow.
And costs, how do they manage those?
Cash costs came in at $1,478 per ounce. That's the direct mining cost. But the bigger number people watch is AISC all-in sustaining costs. That was $1,959 per ounce. Includes sustaining capital, everything to keep the lights on. Gives you that fuller picture.
Okay, that makes sense. So strong financials. Now, the really interesting part of the operations driving this, you mentioned those big investments. 2 Canadian mines, Greenstone and Valentine, they seem to be the core of the story now, right?
Absolutely central. At Greenstone, the ramp-up seems to be going really well. Q2 saw mining rates up 23%, processing rates up 20% compared to Q1. That's solid progress.
And they mentioned even better numbers more recently.
Yeah, as of early August, month-to-date mining rates were another 10% higher than Q2, averaging 200,000 tons per day. And the processing plant, consistently hitting above its nameplate capacity, 27,000 tons per day on a third of the days leading up to August 10th.
So how are they pulling that off? You mentioned a new COO.
Yes, David Schumer. He joined mid-May and seems to be making a difference. They're doing specific things. Improving shovel loading times, adding support equipment, using double-side loading for trucks to cut out positioning time.
Like making the trucks more efficient getting loaded.
Exactly. And optimizing blasting for better rock fragmentation, less waste. It's that kind of detailed ground-level optimization that really boosts efficiency in mining.
Makes sense. It's about tuning every part of the process.
Yeah.
What about the grade of the ore?
Good question. Q2 grades were actually a bit lower. 0.92 grams per ton versus 1.06 in Q1. But management says they're targeting improvements as they mine deeper and refine things. They're already seeing August grades back around 1 gram per ton.
And they have that stockpile to help manage things.
Right, a big one. 6 million tons. And about 1.5 million of that is higher grade. So they can blend that ore to keep the mill feed consistent while they work on optimizing the main pit grades. It's a smart buffer.
Definitely sounds like it. Okay, let's turn to Valentine. That's the other big Canadian project, poised to be the second cornerstone. What's the status there?
Valentine is right on the cusp. The plant's fully energized, circuits tested. Commissioning crews are doing performance checks now. The big news is first ore feed is scheduled before the end of August.
Wow, so very soon.
Very soon. And then first gold pour about a month after that. The key target for Valentine is hitting nameplate capacity by Q1 2026. They said definitely by Q2 2026.
And funding, is it secure?
Management confirmed it's fully funded from cash on hand and existing cash flow. That's a big de-risking factor. And they spent over $25 million on critical spares. Seems like a detail, but it's important for a smooth ramp-up, minimizing downtime. It shows they're planning ahead.
Okay, so Greenstone ramping up, well, Valentine about to start. Those are clearly the growth engines. But let's zoom out quickly to the rest of the portfolio. There have been other moves too. Los Filos in Mexico is still suspended, right?
It is, yeah. Still waiting on community agreements, but there's progress. They have agreements signed with 2 of the 3 communities, and they're actively working on a 2-community plan to restart exploration and potentially build a CIL plant there.
CIL.
Carbon in leach. It's a common gold recovery process, often more efficient for certain ore types. So it's not just about restarting, but potentially improving the operation there.
And besides Los Filos, they've been adjusting the portfolio quite a bit, it seems, like really sharpening their focus.
Absolutely. It looks like a very strategic rationalization. They closed the Calibre Mining acquisition back in June. Calibre brought producing assets, mainly in Nicaragua, adding scale, diversification, and some lower cost production.
So buying strength.
Yeah.
And selling.
Right. Concurrently, early August, they agreed to sell their non-core Nevada assets for $115 million. That's a clear move to simplify, get out of non-priority areas, and recycle that cash, probably towards those Canadian cornerstone assets. Very focused.
Makes sense. Acquire strength, divest non-core. What about Castle Mountain? There was news there too.
Yeah, Castle Mountain got Fast 41 status on August 11th. Now, for you listening, Fast 41 is a U.S. thing. It basically streamlines federal permitting for big infrastructure projects. So for their planned Phase 2 expansion at Castle Mountain, this is a big advantage. Should make the permitting process faster, more predictable than it might be for competitors.
So a more focused portfolio, faster permitting path for a key project. And even Brazil, I think they mentioned better costs there.
They did. Better than expected unit costs. And management hinted that as cash flow improves, they'll be able to put more capital into exploration and equipment there, like at Mesquite. Exploration is expected to restart there in the next few months.
Okay, so strengthening across the board, it seems. What about that tax issue in Nicaragua from the Calibre assets?
Yes, there's an ongoing tax dispute there. But Equinox sounds confident they'll get a beneficial resolution. They believe their operations are kind of grandfathered under the old rules. Their confidence suggests they don't see it as a major financial risk right now.
Okay, so we've got the strong Q2, the operational strides, the portfolio changes. What does it all mean looking ahead? What's the guidance telling us for the rest of 25 and beyond?
Okay, so full year 2025 guidance, consolidated production between 785,000 and 915,000 ounces. And remember, that excludes Los Filos and Castle Mountain, so it's focused on the core producing assets right now.
Right, a baseline. And costs.
Cash costs estimated $1,400 to $1,500 per ounce, and AISC guided between $1,800 and $1,900 per ounce. This guidance really reflects that core story, a significant increase in cash flows coming in the second half of this year and into 2026, driven mainly by Greenstone hitting its stride and Valentine starting to kick in.
And how do those big new mines affect the cost structure going forward?
That's the potential upside for margins. Management suggested that for 2026, cash costs could potentially drop by, say, $100 to $150 an ounce compared to Q2 25 levels, because Greenstone and Valentine, as they reach full scale, are expected to be lower cost operations.
And what do they plan to do with all that extra cash flow?
Priority number 1, deleverage. Pay down that debt, the $1.37 billion net debt figure. But they're looking further ahead, too. By this time next year, they expect to be talking about returning capital to shareholders, maybe dividends, maybe buybacks. That's a big shift for them.
A shift from builder to returner.
Potentially, yeah. They even think it's, quote, reasonable to target being in a net cash position by the end of 2027. Now, that assumes no big spending on Castle Mountain Phase 2 or restarting the Los Filos mill in that time frame. But that improved cost structure, plus strong gold prices, should mean really healthy margins.
Healthy margins, paying down debt, maybe dividends. That sounds like a solid plan. But what are the risks? You know, what could derail that deleveraging or net cash goal? Gold prices falling.
Gold price is always the big variable for any miner, right?
Okay.
A major drop would definitely impact cash flow and how fast they can pay down debt. Operationally, these big ramp-ups, Greenstone and Valentine, they're complex. Things can go wrong, unexpected geology, equipment issues. Hiccups are possible, even likely at some point.
So execution risk is still there?
It always is with new mines. And then there's the external stuff. Those Los Filos community talks need to succeed. The Nicaragua tax thing, while they're confident, still needs resolving. Geopolitics is always a factor. So yeah, challenges exist, but they seem to be trying to build in resilience, like with those spares for Valentine.
Right. And through all this, they're still focused on exploration.
Very much so. They see themselves as an exploration company backed by significant revenue.
Okay.
They plan to spend about $100 per ounce on exploration ongoing, which is significant. They see potential in Nicaragua, around Valentine itself, Los Filos eventually, and Mesquite in Brazil, looking for that next discovery while milking the current assets.
Okay. So as your guides here on Talk Tickers, we like to look around the corner sometimes. And we always say, this is not financial advice, but sometimes exploring possibilities helps understand the potential range of outcomes.
Exactly. So given Equinox's momentum and that clear path to more cash flow, here are a couple of, let's call them outrageous but plausible investment theses to think about. Just ideas.
Okay, let's hear it.
Thesis 1, the Valentine volatility play. Okay, so Valentine's first gold is imminent. A smooth ramp-up is probably mostly priced in by the market now, but like we just discussed, big mine ramp-ups are tricky. Things can go unexpectedly wrong or unexpectedly right. Maybe they hit hurdles, maybe they blow the targets out of the water.
So the idea isn't picking a direction, but betting on a big surprise.
Precisely. If Valentine dramatically over or underperforms what the market expects over the next year or so, the stock could move significantly. This thesis is about playing the potential for volatility around that execution rather than guessing the outcome.
Interesting angle.
Okay.
Thesis 2.
Thesis 2. The Mexican Phoenix rebirth. This one centers on Los Filos. It's suspended, right? So it's basically unquantified upside, not really in the current valuation. If they get those community agreements sorted out, especially if they move ahead with that CIL plant for better recovery.
That could unlock a lot of value that the market isn't counting on right now.
Exactly. Given the low expectations baked in, a breakthrough there would be a major positive catalyst. The wild part is the timing. Who knows when or if those agreements will finalize? But the potential upside of bringing a large built asset back online and optimizing it. It's like Los Filos rising from the ashes, a phoenix.
All right, the Mexican Phoenix. Okay, 2 interesting out there ideas. So wrapping up this deep dive, it really feels like Equinox Gold is at a key turning point. Q2 showed strong financials, and those strategic moves, especially Greenstone and Valentine, are definitely paving the way for more cash flow.
I agree. Their focus seems clear. Deleverage first, use that strong gold price, but keep exploring for the future. The long-term outlook seems pretty positive, assuming they execute well. The key things for you to watch are that continued ramp-up execution at the Canadian mines and any news on those community agreements, especially Los Filos.
And maybe a final thought for you to chew on. As Equinox sharpens his portfolio and leverages these big, potentially lower-cost Canadian mines, how might that change the game for other gold producers? Could their improved cost structure put pressure on competitors, maybe set a new bar in the industry over the next few years?
Something to consider. And just the usual reminder, everything we discussed here is purely for informational purposes. It's definitely not financial advice. Always do your own research. Talk to a financial professional before making any investment decisions.
Absolutely. Thanks for joining us for this deep dive into Equinox Gold. Until next time, keep learning and stay well informed.